All right, we are back. Good morning. It's a brand new week. It is Monday, August 29th, 2022. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks so much for taking the time to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. Wow, we got a lot to talk about. Friday's Jackson Hole wasn't exactly quiet, as you know. So we're going to go over all today and answer some of your questions. Ready to rock. Bottom right-hand corner of your screen, a little black logo. Click on that. Turn on notifications. Subscribe to our channel. If you haven't already, make sure to hit that like button if you like these videos. Let's go ahead and get started. The Dow is down 250 points this morning. NASDAQ down 126. Keep in mind the Dow was down as much as 300 last night. S&P futures down about 0.83%. Russell down 0.88% at 1882. Crude oil up 1.14% at 94.10. Gasoline futures continue to slide, $2.64 now. Natural gas, $9.12. Gold futures down, even though the market is down as well. Interesting. And the dollar's down. Gold not doing great, 1748. Let's see if we recapture that 1700. We'll do that chart as well. Silver futures down about 1%. Copper futures down 2% this morning. Euro dollar is bouncing above parity, 1.001. Dollar yen up 97 pips, 138.49. And Bitcoin futures is back below 20,000, 19,785. And Ethereum futures, 1462. That's down about 4.88%. 10-year treasury yields 3.095 off that 3.1 level. Dollar index is rejecting that 110 resistance. We'll go over that in a second. 108.66. And the VIX is up 6.38% at 27.19. Good morning. There's the numbers. Let's go and start with S&P futures. So what happened on Friday is something that we've kind of talked about for a while, if you guys remember. The Fed pivot. Did we actually get a Fed pivot? Kind of, not really. That's where we kind of ignited that short squeeze or that bear market rally or the bottom, whatever you want to call it. And a lot of people have asked me, Carlos, have you been buying this rally? And I said no. And a lot of people are like, why not? Why not? And I said, I think we do retest. At least I moved my floor from 3,500. And again, the reason why I had 3,500 on the S&P as my level to buy is the 200-day. But I don't think we're going to get there. So again, I raised my target to want to buy stocks or to add more risk to the portfolio right at 3,900. You can see it right here, 3,900. So it's not like this is something, that doesn't ever happen. There is also the 2008 analog, the 1960, I think it's a 1965 analog. There's a lot of analogs on Twitter and on Instagram where you see comparisons. I posted a chart on that. There's so many different ones that fit everyone's narrative. So bull, bearish, whatever. Again, there's not a bigger bear than someone who's short. There's not a bigger bull than someone who's long. It's just the way it is. We all can come through as humans with cognitive dissonance. This is why stock market and trading is human behavior. It's like poker all in one, because you got to read past what you see in front of you. And this is why it's important to learn the market. And this is probably why you're watching, because anyone can look at a chart at any time and say, oh, yeah, this is what happened. Yeah, that's what happened. Sure. But why things happen is super important. That's the way you're going to really set your mark in the market, is to understand why things happen, not just what happened. You can read a newspaper and know what happened. That's pretty easy. That's not that difficult. But why things happen, to read under the hood, that's really the key of options trading, futures trading, investing, or you just keep it simple and buy an S&P 500 index fund for the rest of your life, which is totally fine. I'm actually for that. I love that. But again, if you're here for the most part, it's because you want to know why. The why is the key. So let's go over the why. What happened? Why it happened? Okay. So Fed Chair Powell had a prepared speech at Jackson Hole on Friday. And again, I didn't expect too much to happen. So a couple of things I'm going to just go over this section as where Carlos was right and where Carlos was wrong. Carlos was right this week, or last week, was the chop. We had a lot of chop for 4 days. So we expected that. You had the trend line holding up. That was right at that point. Where Carlos was right first in the beginning, I said that we were going to have a head and shoulders and continue down, if you remember that on Instagram. Where Carlos is wrong. Right at 3 p.m. that Thursday, we had a huge green candle where it broke above the left shoulder, the highs of the left shoulder. So I thought that would be invalidated, but it wasn't. We actually got as high as the beginning parts of the head at 42.23. We got as high as 42.17. I thought we would go higher, but I didn't have any position open. As we got closer to the trend line, I thought that would hold, and this is where I was wrong. So I had spy calls on Friday. It didn't work out. We cut them off, thankfully. Try to see if we get the bounce. We didn't get it. Not a big deal. It was just one loss for the week. We had two other winners this week, and Masterclass got some other stuff. But for the most part, that was tough to see that. And I kind of missed this downturn. But again, on a Friday with holding stuff for the weekend was a little difficult. I'm glad that we actually kind of held ourselves to not getting too nuts because things are just getting a little wacky. Again, 1,000 points in the Dow. So that's what happened this past week. Now taking a look forward. Now we're looking at the market. Here's a 4-hour chart. We just filled this gap here. No, we did not fill this gap at 40.42. So I expect us to get there relatively soon, maybe today. So again, what usually happens after you have a down 1,000-point day? A lot of people's first thought is we bounce back the next day. Not technically. There's no real pattern on what happens when the market falls 1,000 points to the Dow. There is no real edge on, oh, the next day it bounces or the next day it falls. Doesn't really work like that. But again, what matters here is the technicals, obviously, technical analysis, because fundamentally, we don't have anything coming up other than non-farm payroll, which is labor. That's going to be on Friday. So until then, we got to see exactly what else we have. We have some PMIs. I put that information up on Instagram if you want to see the economic data. So let's go ahead and start talking about now what the hell do we do? What does this mean, Carlos? Do we go back to the lows? I think we tapped 3,900. That's where I want to start buying some risk, but we're not there as of yet, obviously. So really the level we're looking at here, guys, is take a look at the daily. And I was checking some RSIs as well. Oversold on the 4-hour, 1 hour is a little bit bouncing, and the daily is on not too oversold territory, but leaning towards it. But look at this yellow line here. I know there's a lot of yellow lines, but take a look at this one. This is your 50-day moving average on the daily. Key level bounced right off it to the T. So if we're looking at that, let's draw some lines. I know drawing some lines is always fun. We'll start at the bottom at 36.39, and then we'll go ahead to the next line here. All right. And then we'll go ahead and extend it to the right. And where does that get us on that trend line? 3,900. That's the level I'm looking for. So again, you see that I also did this drawing. I'll remove that. But again, we're going by the wick lows, 1, 2, and up to here, 3,900. I think that's our floor. Do I think we hit 3,900 this week? No. If we do, great. But I don't think we do. I think we kind of chop around here. Maybe retest the 100-day on the daily around 40.68. Again, I think buying dips, selling rips seems to be kind of the level we're doing now. But if you do take a look at this interesting chart, this is the S&P 500 midterm election year seasonality. This was sent to our market blog and investment club. So you can see that we're right here towards the tail end of August, pretty much following the analog. We should get a nice little bounce towards the beginning of September, right after Labor Day. We'll get one more tank job, apparently. Get a bounce, and then a tank job to the bottom on October, towards the beginning of October, and then we start rising again. That's based on seasonality. Doesn't mean that's going to happen every time. If you remember 2008, Lehman Brothers collapsed, bankrupt in October. That kind of sways that drop because it actually happened in September 29th, or I think it was September 18th or 19th. I have to take a look at that. But that really skews it. Never mind what of a meltdown that was. So I'm going to have to see if I can find a chart that removes that 2008 analog. I don't agree with the 2008 premise of the S&P 500 this year matching that. Just the simple fact that we don't have systemic risk. Yes, you have inflation. So again, you're more in the 1980s, the late 70s, but not in 2008. 2008 was an absolute crap show. Let's just call it. This video I don't want to just curse on it all the time. But for the most part, we had a actual bankruptcy of an investment bank. So unless you think Goldman Sachs, Citibank, JP Morgan, or Bank of America, Merrill Lynch, or Morgan Stanley are going to fail next month, I don't think so. I don't think we get to that level. But again, everyone has their views, and that's completely fine. I just gave you mine. 3,900 is my level where I'm going to start adding some risk. That's okay. I'm glad that I didn't really get too excited to buy this rip to the upside, which is fine. But for the most part, again, staying patient. I think we get one more retest of 3,900, and then we'll start heading higher. I don't know if we're going to hit all-time highs this year. We need a lot of things to work for us. But again, the Fed, again, you can't have it both ways, Bears. You can't trust them. You can't not trust them when they say, "Oh, we're not going to pivot. We are going to pivot," and then you start trusting them when they say they're not going to pivot. Again, if you think the Fed lost credibility then, why are you going to give them credibility now? Because it works in your favor, bears. And I understand. If you're short, you're loving this. If you're long, you're hating this. It's kind of a, a binary thing. So with that being said, S&P 500, again, technically speaking, I say 3,900 is the floor. And I think we're holding that 50-day moving average. And I think we go a little higher today, maybe 40, 50, and end the day flat, if anything. I think the higher end range is 40.68. But the main thing here, I think you're looking for opportunities when it comes to individual stocks, at least on a technical basis. In terms of the indices, S&P 500 at 50 is very key. But again, I'm going to keep a very close eye on it. Let's see where we go. Let's go to the volatility index and kind of keep it on the macro sense, right? Again, we do have a gap to fill here, so let's keep an eye on that gap fill right at 25.87. That might get us to flat on the S&P. If you want to take a look a little more, 21.27 is your gap to fill to the downside. After that, there is no more gaps on the daily. So again, that is expected to fill. So I expect a nice snap back once we fill this gap here. We'll probably bounce. That's the 100, and then we'll get to around 21.27. Maybe that comes around October with that time frame of the seasonality, right? Maybe. So VIX not telling us much. Let's go to the dollar. The dollar, again, this is where it gets interesting. The dollar being really high where it is not a good thing. And you can see that 110 level, guys, is still holding. If you guys remember, I've been watching the video for a while. 110 is that level we're watching. It is literally at resistance. We need this dollar to fall so commodities can continue to fall. And if commodities continue to fall, again, we will have lower inflation since PCE has more rent. But again, at least with PPI and CPI, energy costs are such a big part of that number. If we can get commodities go down at least a little more with the dollar going down a little bit, the dollar going higher is helping inflation. Excuse me. We know that in terms of the dollar going higher, that hurts commodities. But again, if we want a little more risk on the board, we need other assets or other currencies to start popping up as well. We can't have the dollar be too strong. That's kind of my thing in terms of the equity markets, because equity markets are priced in dollars. So again, you kind of have twofold. If we have a strong dollar, inflation is going to get absolutely destroyed. We're actually going to have deflation. If we have a weaker dollar, commodities are going to go a little higher, inflation kind of creeps up. So again, it's not that the United States is doing amazingly. We technically are in a recession. It's just the rest of the world is really, really in a bad spot. So the dollar, the United States and the U.S. dollar is in a place where we have some advantage, being an American, anyways. Let's go ahead and take a look at the 10-year yield. 10-year yield did reject 3.5, thank God. And you could see here, actually, we did tap 3.5 on that day, 3.483. Looks like a double top. If we can get rates to go lower, that would be a really great sign. So again, keep an eye on rates. If rates go lower, expect equities to go higher. So again, we got resistance on the dollar. We got resistance on the 10-year. Very close. Check, check. VIX, not so much. So let's go ahead and head up to crude oil. Crude oil will go to the hourly. And again, that 95 level, 1, 2, kind of resistance there. Here's 3. So if you guys want to just draw a fancy little line, we can. And you could just see just downward trend. See? The downward trend still rejecting. 95 is still a level. Doesn't mean I don't think we break it. But again, until I see a solidified 95 level holding 96, 97 or so, I'm not going to add energy risk here until I see that move. Let's take a look at gold. Again, a very good risk off proxy. When the markets are down, gold is usually higher, but we're not getting that today. We're basically flat. So 1673, I had a question on Instagram asking me about gold. I think 1673 is your level to buy. Last time we were there, we got as high as 1826. Pretty good trade if you took it. But again, if we retest 1700 to 1673, I would go long on gold. That'd be a really good spot on the weekly chart, on a multi-year weekly chart. And that's where we are for the day. Let's take a look at Russell small caps and see where we are. We do have a gap to fill at 188. That's kind of too close for any kind of decent level trade. Pretty much broken the 20-day, you broke the 200-day, or you rejected the 200-day. Now what? So again, you do have IWM has a little space down here to 184.20. That would not be a bad trade to look at. Let's go and take a look at the Qs. Oops. Taking a look at the Qs, any gaps to fill? Not that I see of at this juncture. You have one slight gap to fill at 287.51, and that's all she wrote. 287.51 might get us to that level that we're looking for of 3,900 on the S&P. Pretty ugly stuff all around, but we've been here before. So we're going to trade the market. We're going to trade what we see, not what we hope. We're going to use moving averages. We're going to use right risk management. And again, we have one more week of pretty slow volume other than Friday, obviously, a really big de-risking day. But for the most part, that's what I see. I think 3,900 is our floor. I think we'll bounce from there. I think that's a pretty good level or demand zone that most traders will look at. I think the worst in terms of the stock market is already bought in June. I think inflation continues to go down with energy prices going down. We see gasoline futures. Take a look at that. That's the chart that everyone wants to see to zero, right? Am I right? How about 251.42? We're getting extremely close. That is a big level. If that breaks, well, lower gas prices. Good thing for everybody, right? And that's the memo for the day. God, that was a lot. Let's answer some questions. Good morning. Brano's asking about Palantir. Let's go and take a look at Palantir together. Palantir is a stock that I own as well. So you're in good company, sir. Palantir, where is the level that I would want to add more? And I do. $7.47 is my level. That's where I have my alert. And that's where I'm going to go by. $7.47. We're about 30 cents away. That's what I'm looking for Palantir. I know it was a lot of stuff going on in terms of the market and a lot of moving parts. So what's the trading plan? What would you do today if you were me and I were you, right? Well, let's start looking at some names that we know have tons of volume. Apple, AMD, Tesla for the fun of it. Oh, Tesla. Tesla, no real gaps to fill. Not a lot of edge. Not a lot of edge. Again, you're at support on 280 right on Tesla. If that does break, then you're going to go lower. So let's go ahead and place an alert at 280 on Tesla. Create an alert. We'll expand this up to the daily and see what we got. Yep, 280, key level. You have a gap to fill here at 251. I'd probably swing that with that break. Let's go ahead and draw the tools here. So if we get a little lower, that's the level I'm looking for right there, 250. So 250 being your target on Tesla. If we get a break of 280, let's take a look at Apple. Keep in mind they have their iPhone unveiling, I believe is next week or in 2 weeks or so. I have to take a look. It doesn't matter. I have to have one. So I'm going to get it anyways. If we break 162.35, guys, on the daily, that's your 61.8 Fibonacci level. I'm watching for Apple to fill this nice gap here. Down here to 157 or so. So that gives us a little bit of room to have some fun. Let's take a look at Microsoft. Microsoft breaking the 50-day moving average on the daily. Not great. There is a gap to fill to the upside, but before we start talking about any kind of upfill gaps, get me to 280 and we'll talk. That's the daily candle. If we can recapture this 280 level on Microsoft to the upside, then I would take a look at the 285s or 287s or so and fill this gap. But in terms of really the next level down for Microsoft, it's probably going to be 260. So again, if you do 265 break, you get a $5 move to the downside. You can target that, or $3 move to the downside. I will take a look at the 260 puts, and that's really it in terms of edge. Let's say Qs. Qs looks like it's making some kind of floor here or some kind of support. Take a look at the 4-hour 299.12 big level. So let's go ahead and place an alert there. If that does break, then we will start taking a look at shorting, possibly down to 293.54. That's about a $6 move. I'm pretty sure we could do some fun stuff with that. That's where we are this morning. That's where we are, guys. I haven't done an after market recap because of the fact that it's kind of repeating the same thing over and over again. If something big does happen during the day, obviously Jackson Hole being on a Friday is just mean. I wish that would have been on a Thursday. But either way, I was with family on Friday anyways, enjoying some dinner with my wife. So again, I didn't do a video. But if anything comes up, I'll do a video here and there. But for the most part, it's kind of the same thing over and over. The morning note, I think, is a better prep for you guys and kind of gets you set for the morning. And then the afternoon, we kind of go over things as we go along. If you're a follower on Twitter, you already know what we're talking about pretty much on an everyday basis. If you're a follower on Instagram, you get the recaps, you get the 5 things you're watching. in the morning from Bloomberg. So the good news is that if you follow us, you're informed. That's important, and that's all I can ask for. Just stay informed and know why things happen. Super key. Have a great rest of your morning. I will catch you guys tomorrow for the morning note. Don't forget that September 1st is the last day for the masterclass deal that we have. No more lifetime access for masterclass after that date. If you want to be grandfathered in, like our current members, you need to sign up before September 1st. Make sure to hit up Kevin. He's our head of sales. He will be assisting everyone who needs assistance in regards to signing up. And thank you, Beth, for following us. This whole weekend, really, I've been watching a lot of Grand Theft Auto videos and seeing how they do it. God, they're very talented people out there on YouTube, and I'm not one of them. One thing is just I know how to speak, I know how to talk about different things, sure. But when it comes to graphics and everything like that, I can't say that I know what I'm doing. So we are kind of making the morning note a little better. If you see some changes, I hope you enjoy them. But again, forget all the bells and whistles. What matters is the message. What matters is the education. What matters is the facts and the stuff you need to use or need to know to profit from the market. So I love the bells and whistles. Obviously, we're working on that with marketing team, and I hope you guys like it. And if you have any feedback on the channel, guys, I always love the feedback. Comment section below. Make sure to hit that, and have a great rest of your morning. I will catch you guys tomorrow for the morning note. Cheers.